What's up guys, welcome back to InvestingPH. Wow, what a month for us investors. We are back again to where we were in September 2020. This was driven by a lot of negative sentiments, such as fear of global recession, and of course, one of the main problems today for our country is the rising inflation, which was forecast to settle around 6.6 to 7.1%. Now for the past years, we have seen inflation increasing and increasing. With high inflation, prices are higher which can have a big effect on our businesses. Now although oil prices have somewhat lowered, it's still nowhere close to the pre-pandemic level. And another factor affecting our market is the dollar to peso rate, which is the highest we've seen so far. We are now at 58.9. With a weaker peso, this increases the overall prices of goods, which also increases inflation. Now although our market has been battered over and over again, I just want to let you guys know this isn't just in the Philippines alone. Even the US index has dropped significantly from its previous high, and almost all major indices have dropped over the past year. So this isn't just a local event we are seeing. Now although analysts predict our index will drop even more, there's no need to panic. In fact, every time I see stocks dropping, all I see is a huge sale. You know when the PSE dropped below 6,000, I don't even know where to begin buying. Almost every stock on my watch list was on sale. And this is also the greatest benefit of value investing. During the time when the index was hitting the range of 6,800 above, I stopped buying some of the stocks on my watch list because I considered them overvalued at that time. So I concentrated on the stocks which I think are the most undervalued. Unlike for some investors' mindset, who buys those who are rallying in price, this is a very common scenario in the market. People like to buy high instead of buying the cheap ones because they think the cheap ones aren't a good investment. They like to ride a trend instead of focusing on the strong companies that are currently very undervalued. Though I know this isn't an exact science, computing for the intrinsic value is still just projections, but it sure did help me avoid huge potential losses, which I'll show in a while. So anyway, for everything that is happening as a long-term investor and a dividend value investor, I see this event as a huge opportunity to buy very cheap, strong companies. Let me emphasize that part. Cheap, strong companies. I'm not just buying cheap companies. I am still buying companies that have strong financials that I think will grow more in the future. And since I'm not going to use the money I invest in, I can just hold, buy more, and benefit from the higher dividend yield these companies are giving me, since when prices drop, the higher the dividends I get. Now some companies I am investing in, if you look at a pre-pandemic standpoint, won't even be considered good dividend-paying companies. But since their price has dropped so much, for a dividend investor, it's now a good buy since the yield is considerably high. So for an investor with a dividend value approach, this drop in stocks is a huge advantage for me. I don't care what all those analysts are saying. I don't care what the market will be in. I will just stick to my strategy always and buy the cheapest companies on my watch list and reinvest every dividend I get to let the power of compounding interest be on my side. Anyway, let's now head on to my portfolio. As of the end of September, I now have a total invested money of 1,455,600, and with the PSEI dropping below 6,000, my portfolio as well has dropped significantly and has now put me in the negative zone. Almost all the stocks I hold now are glowing red. My goodness. Well, I've seen worse during the peak of the pandemic. But this is the lowest my portfolio has been for the past 1.5 years. Now what makes me happy is when I compare my portfolio to the index. Right now the PSEI is at a negative 29.73%. During the last time the index were at this level, my portfolio during that time was at a negative 21%. So why the big difference now? Well, one factor is my consistent buying of the cheapest companies on my watch list during the time the index was hitting highs above the 7,000 level. Unlike the index which continued to invest in the highest market cap companies in its components, I was doing the exact opposite of it, buying the cheapest in my portfolio. So when stocks drop, the index dropped harder than my portfolio. And another big factor that contributed to this was my reinvesting strategy of all the dividends I received. My dividends are now the only driving factor that pushed my portfolio upward. The dividend yield of my portfolio is 2 or 3 times higher than that of the index. Though I don't know if I can continue to outperform the index using this strategy, but it's exciting to see the results after 5 or more years. So anyway, moving on to the stocks I bought this month. Now, I've been on a buying spree for companies that has a dividend yield of more than 3% for the past months. So I've consistently bought MREIT. Although I can't yet analyze the company since it's new and financial history is lacking, what I'm looking at is their main company MegaWorld. I like MegaWorld. It has strong financials, and since the REIT has a very high dividend yield for its price right now, it's a buy for me. Another one I bought is Security Bank. Its dividend yield now for its price is higher than 3%, and the same for Costco, which is really dropping for months now. I am also happy that I can again buy DNL. I really like the company, and as soon as it hits my buy below price, I'll just continue buying it again and again. Now, I also availed of Globe Stock's rights offer, which for me is a very good deal. I am entitled to 3 shares at a very huge discount, which is at 1,600. I also like Globe, and that's a huge discount for its price right now, though it won't yet appear on my portfolio since they say it will be released in the last week of October. So that offer is a good addition to my buying spree of dividend stocks. With that, these are all the stocks I own. LTG still takes up the largest share, followed up by MegaWorld, Aboitiz, and DNL. Now, I haven't added more shares to LTG as I am focusing more on bulking up my other stocks. And as for MegaWorld, same as I said earlier, I am focusing on dividend stocks as of the moment. And since MREIT is also a part of its company. Now, if we base the size of my holdings with capital gains, the largest would still be LTG, but now it is followed up by DMC, which has a total value of 168,000, and Aboitiz Power with 138,000. By the way, this is from Simply Wall Street. They have a bunch of features as well to help you analyze your portfolio, like computing the fair value of your portfolio based on free cash flow, PE ratio in comparison to the market, and a lot more. This has helped me a lot in tracking my holdings, from updates of earnings and dividends release, from insider buying down to computing an intrinsic value for me, which can be a guide in knowing if stocks are undervalued or not. So if you want to sign up to Simply Wall Street using my link, you get a 14-day free trial of all their platform's features, and not only that, if you do avail of their plan using my link, you get a 30% discount. So sign up now to Simply Wall Street and level up your investing journey. Anyway, back to the video. Now, if we group my stocks by sector, holding companies take up 29%, real estate 17%, banks 16%, and REITs have now climbed up to 10%, and others have less than 10% share. Now, for my dividends, I got quite a lot this month. MPI, MREIT, Globe, LTG, Metrobank, Shang, and DDMPR gave me dividends, which gave me a total payout of 10,338 pesos. This is already after taxes. This has now increased this year's dividends to 52,248 pesos. So if I divide this by 12, I am now earning 4,350 pesos a month without doing anything. That is a good amount already. That's almost our electricity bill at home. Now, there are still some companies left that will pay dividends this year. AUB has already announced. Globe still has one round. And Security Bank usually pay out twice a year. So I am hoping they would pay another round as well. So this will further increase my dividends this year. This is really exciting. My goal is to earn more than 10,000 pesos of dividends a month before I reach 30. So hopefully I would achieve this goal. I can already feel the compounding force of reinvesting dividends. With the total dividends I received so far, which is 104,000, if my portfolio's dividend yield is 5%, my dividends are now earning me 5,000 pesos more, and this will continue along the years. This is what we call the snowball effect. It is really amazing. And for me, dividend investing is a good strategy to incorporate in the Philippines. Our market sometimes stagnates for a long time. This already happened way back in 2000 to 2010, wherein the index didn't move for a long time. And this may even be the case for us right now. If you invested in 2015, your money is still in the negative. But that isn't the case if you're a dividend investor. If prices don't move, these companies are still giving you a good amount every year. And if reinvested, will grow and grow to push your gains to a positive. That's why I love dividend investing. It is much more predictable and gives you a good amount of cash flow. 4,350 pesos a month without doing anything is quite a good amount already. And this will increase more in the upcoming years. Anyway, this ends my portfolio update for September. I hope you guys see the bigger picture. Investing takes time. If you're always affected by the ups and downs of the market, always panicking, then investing isn't for you. This is normal in stocks. That's why the best thing you can do is accumulate shares from great companies that are undervalued. Find the best strategy that fits your lifestyle. As for me, who wants to increase my cash flow, I am choosing the dividend investing approach. This for me is the best strategy that fits me. But that isn't the case for everyone. If you don't have the time to research individual stocks, then go for an index. There are countless strategies available for you. All you have to do is find the best one for you. With that, this ends this video for today. So if you've learned something and still haven't clicked the like button, then I'd appreciate it if you do so before leaving. And if you still haven't signed up to Simply Wall Street, then try it now. There's nothing to lose. So thank you and see you in the next video.